Have you invested in the stock market? If yes, then congratulations. Today was a good day for you. Go ahead and check your portfolio. In the last 2 days, Indian markets have scaled new highs. Both Nifty and Sensex hit all-time highs. The Sensex topped the 67,000 mark for the first time in its history. The Nifty reached 19,811. Both are record numbers. So tonight, we're looking at 3 questions. 1, what is driving this rally? 2, should you be investing now? And 3, what does it say about India's economy? First, let's understand the rally. It's been building up for quite some time. Since late March, the Indian markets have gained more than $600 billion. The Sensex is up almost 15%. So the momentum was there. But where did that momentum come from? Foreign investors, they are pumping big money into Indian stocks, around $16 billion since April. That's around $1 billion per week. India has become the largest recipient of foreign investment among emerging markets. What explains the sudden interest? Well, for starters, there is a slowdown in China. After the pandemic, investors were selling in India and buying in China, but now it's the opposite. They're selling in China and buying in India, hence the rally. Another reason is the earnings reports. Indian companies are publishing numbers for the first quarter. How much they sold and how much money they made. Sort of like a progress card, a report card. The assumption is it will be good. India's consumer confidence has reached pre-pandemic levels. People are buying, people are traveling again, so companies should be doing well. These 2 factors are pulling up the Indian markets. It also helps that the global stocks are in the green. Overall, world markets are at a 15-month high. They're expecting some good news from central banks. You see, inflation has largely eased off. Let's in fact look at US inflation, for example. In America, inflation was 9.1% in June last year. This year in June, it fell to 3%. That's the lowest US inflation in 2 years. The Federal Reserve will be watching this closely. That's America's central bank, the Federal Reserve. They have been hiking interest rates to battle inflation, but now could be the time to pause. Maybe let the economy breathe a bit. If that happens, the markets will love it. So to sum up, there are 3 big reasons for India's stock rally: more foreign investment, hopes of good earnings, and global momentum. Now to the second question. Is this a good time to buy? Absolutely not. Experts have warned of a correction pretty soon. What does that mean? Well, think of this rally as adrenaline. When it pumps through your body, you're raring to go. You're more alert, more energetic. But what happens when it disappears? You lose the energy. This rally is a bit like that. Yes, there is a lot of global interest in the markets, but even then, these levels are way too high. So expect some volatility soon. Plus, a lot of people will be looking to sell at these levels. And why not? It's a good time to book your profits and leave. Just one problem though. When so many people sell, it will drag the markets down. So don't think about investing right now. You can't make much money at these levels, which brings us to the final question. What does it say about India's economy? Let me give you a disclaimer first. I know the markets are often shown as an indicator of economic health, and they are an indicator, but not a perfect one. The markets are a bit like over-enthusiastic parents. They love their children, so they bet on them. The best schools, the best tuitions, the best technology, and sometimes it works. The kids go on to become successful, but sometimes their interests are elsewhere, maybe in music and not academics. In such cases, the investment backfires. Do you see what happened here? The parents made a decision based on their sentiment towards the child, not necessarily skills or interest, but sentiment. The same often happens in the stock market. Investors place massive bets on countries only to lose money. Is that what's happening in India? Well, not from the looks of it. India is expected to be one of the fastest growing economies this year. Rating agency Fitch upgraded the GDP forecast last month. It was initially 6%, it is now 6.3%. So all the ingredients are very much there. Inflation is under control, industrial output is rising, and forecasts are good, which is why many investors look at India as a bright spot. Yes, there is some sentiment and speculation involved, but it's also backed by hard numbers. So the stock rally is like a vote of confidence from investors. They are betting on India. They're positive about the India story. It's the government's job now to repay that faith, to use this pandemic recovery period to make real gains. If not, this rally will fizzle out, and along with it, the sentiment.